What's going on, everybody? My name is Zach Hartley and welcome back to my weekly watch list video. In this one, I'm going to give you 5 stocks that are at the top of my watch list going into the week ahead. We're also going to break down some of the economic events that have previously happened and are scheduled to happen this week. And we're going to walk through the major indices, the Dow Jones, the NASDAQ, and the S&P 500. So here we go. Okay, starting off with the NASDAQ here, it has been an interesting week. It was a bad week for the NASDAQ. We finished lower than where we started, and we're also coming up to kind of a key level of resistance right here around 14,500. We did break through our 20-day moving average, and now we are coming down to our 50-day moving average. It'll be very interesting to see if we kind of see a bounce back and this trend continues next week, or if we're starting to see the beginning of a new bearish trend. Only time will tell. We'll just have to wait and see. When we look at the S&P 500, the pullback this week was a little bit more noticeable. As you can see, again, sort of hitting a key level of resistance here and pulling back through our 20-day moving average. That's this blue line right here, and coming down towards our 50-day moving average. That is this red line right here. Now, when we look at the Dow Jones, you can see that we actually broke through a major level of resistance right here, kind of middle of July right here. And now, again, similar pattern to the last 2 charts that we looked at, a bit of a pullback last week. I would first expect this level right here that acted as previous resistance to then act as a little bit of support for the Dow Jones. But again, we're just going to have to see where it kind of ends up. We're sort of right in the middle of that sort of section right now. When we look at Bitcoin, it has been another bearish week for Bitcoin. We did see a little bit of volatility early in the week, but we're basically trading lower and lower as time goes on, hovering right around $29,000 right now. And when we come to earnings, we still have a lot going on. We've got some major companies reporting earnings. We've got Palantir, UPS, Rivian, Disney, Alibaba, IonQ, and Air Canada. Some of the companies that I follow. I also looked up a bunch of new companies this week, had some fun with that. I'm going to share some of those findings with you in this video. Now, when it comes to market conditions, we have a couple of things to talk about. The big story this week was that the US had a credit downgrade. What that means is that some people think the US might have a harder time paying back their debt in the future. Therefore, it comes with slightly higher risk than where they were previously graded at. Over the long term, what that means is that sometimes people might end up paying more in interest rates because they have higher interest on whatever they are borrowing, whether it's a loan, a mortgage, a car financing, whatever it might be. Short term, though, it's not going to have an immediate effect on anybody. This is more of a long-term thing. As things get worse, the US could get downgraded, or as things get better, they could get re-upgraded. Now, the big thing here and the big concern right now is that the US spends more money than they bring in tax revenue. And so over time, that tax deficit is leading to debt for the company, or for the country. That's why the US has such large debt amounts as a country on a per person basis. And if it gets too high to the point that they can't repay it, it could become a problem in the future. Also happening just this week is that US credit card debt hit $1 trillion for the first time, and delinquencies are on a rise, according to an article in Yahoo Finance. Next one here is that the jobs market is still very tight. At the end of last week, we saw it continue to sell off because the jobs market was tight. We saw the actual unemployment rate decrease, the unemployment rate go down, which would indicate that we are not seeing a lot of people getting laid off right now, and we're not seeing a lot of companies slow down, which is one of the reasons that inflation is still a little bit high. However, for the next piece of inflation data, that actually comes out on Thursday, which is very, very exciting. As you know, with regards to interest rates from the Federal Reserve and the Bank of Canada, we are looking for an easing jobs market and lower inflation. The data that we just saw in the jobs market said that it is not easing. Inflation comes out on Thursday, so that's sort of the second piece of the puzzle. And then, like we reviewed earlier, the 3 major indices all closed lower last week, which is not a great sign to see. But it does mean that some of the best companies are actually going to go on sale. One of the companies that I really like right now is Brookfield Renewable Partners, or Renewables. The companies that I really like here is Brookfield Renewables. This is a company that is basically an operator of renewable energy assets, whether it's hydro, wind, or solar, and they're generating some nice income from it. They're generating some great growth. I think they're doing extremely well, and they pay a dividend, and the company is hitting some major support right here. So you can buy in on major support with a 4.7% dividend, and I personally think that that is very, very attractive and very, very appealing. We are also seeing some of the energy companies take off. As you know, right now, oil prices are going up. I actually should have shown a chart of that earlier. But if you look up the price of West Texas Intermediate crude, the price is going up. And that means that all of the companies that produce oil and natural gas are probably going to go up in value as well. So Novus is one of my picks and one of my favorites right now, because as you can see, it is breaking out of a very, very, very clear bearish trend with good support here that has basically formed a descending wedge. And so here is the breakout right here. I like it, and I don't think it's too late. Another energy company that I like is Enbridge. This is more of a pipeline company, so kind of an energy transportation company. They are also sitting on some major support right now, and they're giving an over 7% dividend yield. Now, I also just read through most of their conference call that they released in the last quarter of financials, and overall, this company is focused extremely long term. They're building massive assets that I think are going to be in demand long into the future, and overall, I think they're going to be here for a long time. I think this dividend is going to continue to get paid out, and I think as long as they don't fall below this, let's call it $47, $48 range, I think this would be a great pickup on Enbridge. Next one here is Tencent. The reason I like Tencent is because I think these Chinese tech companies are actually going to have a nice little rebound over the next kind of year to year and a half. Tencent has already hit a low at $24 here. It has started to basically prove that it is not in a bearish trend anymore. It has started to break out and form some higher lows here. And we are also at the end of a descending wedge pattern right here. So I'm watching this one very closely. I think it's going to break out to the upside. It could break down to the downside. I am being patient, and I'm not going to execute any trades until there is a clear indication as to what direction we are going. Last one I want to share with you is Sea Limited. I have made videos about this company probably a year and a half, maybe 2 years ago, and I like it. They're kind of like the Amazon, but of South Asia. And so I think that they're going to do very well over the long term. As of the short term, though, the price has basically been consolidating between $40 and $90 here for almost 2 years, maybe a year and a half here. And we're currently trading on the lower level of that boundary. I think we do have some good support down here. I don't see it selling off a whole lot more. And as soon as we start to break out to the upside, I think this one's going to run quickly, so I am watching it closely. I don't know if the opportunity is going to hit this week. It might not hit for 1, 2, 3 months from now, but Sea Limited is a company where if you look at their finances, this company is growing extremely fast on the top line revenue. They're doing extremely well, and I like the direction they're going in. So definitely check it out, put it on your radar. This one might be a little more long-term though. Now, if you're interested in learning a little bit more about how to invest or options or day trading or swing trading, I've got courses on Skillshare that are completely free. You get 1 month of free access when you sign up in the link with the link in the description to this video. There's over 14,000 students, over 400 reviews, and over 2 million minutes of watch time that have been spent on my course. So I urge you to check it out. It'll be the best free resource that you can find online. And thank you guys again so much for watching till the end of the video. I sincerely appreciate it. And we'll see you in the next one. Good luck trading, good luck investing, and we'll talk to you soon.